There we go. Go ahead.
Hello, everybody. Welcome to week 14 of the AI Evaluation Code. Hi, Matteo. How are you?
Not at all. Thank you very much, Margaret. It's such a pleasure to continue this series with you.
It's good to have you here. Hi, everyone. We're very happy that you're joining us today. So, last week, we discussed how AI is reducing barriers to local and to global expansion. It's true. AI gives us access to information. It makes things significantly easier in terms of understanding regulation and understanding what are the barriers. However, tonight we're taking it one step further. We discuss how geography is becoming less of a limitation and why investors are increasingly rewarding business that are able to scale in internationally and in continuity. Now, there's a big difference between entering a market and being successful in that market. And this is where a lot of business fails. We've seen plenty of case studies where European companies go to Asia or go to Latin America and it's a complete flop. And that is not a mystery. The reason is that business models cannot just be copy pasted anywhere. There are differences, and that's where localization is important. You just cannot just translate a website, adjust a few the prices, hire a local salesperson, and hope for the best. That is just not going to happen. And the reason behind it is that countries are not just different languages. There are different cultures. There's different expectations, buying behavior, and decision systems are completely different. What's your take on this, Matteo?
Well, I have to say, this is so evident in what we see pretty much every day in business. And I have to say, it's true, absolutely. Market is not just about changing language. It's about so much more than that. I always say this, that when you go global, geometry is more important than geography. It's because you really have to have the right structure. And this is where artificial intelligence becomes so incredibly powerful, because what AI is doing is a lot more than just helping a business translating from language to language. It's helping them really understand, and value creation, wealth creation is driven by really this understanding. And we said last week about this characteristic of AI, which is really to break down barriers. And today you really have to start natively global, because let's face it, if you don't do it, your competitors, AI is actually, creating a weapon for your competitors. So that's why you really have to understand what you may be losing by really deferring a decision about AI. I would say this: one of the biggest mistake the founders make is confusing translation with, let's call it localization. Okay, so it's a bit different, Translation will change just words, word by word. You will hear a different sound, but localization changes relevance. And we got so many lessons from how small businesses become big, how big businesses become bigger. They start with the high valuation triangle from the first side, which is intellectual property, and then they adapt this to which market they're going into. The business that understands this distinction, between translation and localization, gains a significant competitive advantage. And this is what really this is very well known by investors. So it's a well-known behavior that it's expected to have if you really want to be successful internationally.
I entirely agree. And even within one same geographical region, there's significant differences. For example, if we look at Asia, it's absolutely not the same thing deploying a new product in India than deploying it in Singapore. it's actually quite interesting because when we analyze international um, transactions, there's one pattern that I continuously see. And what tends to happen is that once a business has proven itself in an economy, in one market, and they feel that revenue is growing, they have a stable customer base, there's very few compliance, that boosts basically management confidence. And then they start entering the second market. And when they do that, they fail to understand that they cannot just copy paste a market strategy. And that's when performance starts to disappoint. Usually, what tends to happen is the founders, they're confused and they assume that they don't really understand the reasons behind it, because the value proposition is the same. They have the same teams, but the foundation, so the customer, is what is different. The expectations of what a country might have is very different to another one. And that's where it substantially changes everything and impacts the performance of the product.
Mm-hmm. Yeah, I mean, I have to say, I agree so much about what you're saying. That what we find is that founders often discover is not just about selling products. They are, I would say, they are solving problems more than selling products. And the perception of those problems, when you translate from country to country, I would say the perception of this problem varies dramatically from one market to another. That's what makes a big company a great company when they go overseas. We've seen it with Disney, we've seen it with McDonald's, we've seen it with Nike. That's why these companies are so good, because they adapt really what they own, which is their intellectual property, into a new market in a different manner. McDonald's would do it through franchising, Starbucks would do it through joint venture, Nike would do it through distribution. The same goes with Gillette, So we got so many lessons here. Now, different countries prioritize different outcomes, Different industries respond to different messages. And when cultures are different, they buy for different reason. So you don't have the same Indian culture buying for the same reason as a US culture. So you have to understand those reasons. And AI, what does AI does, and that's why really those who are listening to us should listen carefully, because this is very important. It really allows us to identify those differences much faster than before. It really cuts the time needed to do the right research. So before you go into a new market, you are now so much more knowledgeable about what you need to do to conquer that market. And that dramatically improves the probability of success.
Absolutely. If we look at a very simple, practical example, McDonald's in India, for example, doesn't sell beef. There's no beef burger. And they have a lot of vegetarian options because the majority of the population in India is vegetarian and they do not eat beef. In the past, that would have probably taken quite a few weeks of market research, a considerable expense of sending teams to explore, understand, spend time within the country. Nowadays, it's not just a few clicks. All that information is available. So in a way, we could argue that localization is really a form of risk reduction, right? If McDonald's had copy pasted what they sold in the US and the portions of the US into the other markets, it would have been a complete disaster. If we go even further, that same McDonald's product, although the offer is quite similar in Europe, the portions are significantly smaller in Europe than they are in the US. So the large portion in Europe is smaller than the smallest portion in the US, which is an interesting fact.
Yeah, and it's and this is why if you are going to really expand geographically, you have to, of course, you have to study the market. You have to study who you are selling to. But this is where AI can dramatically, I would say, I should use the word a very happy word. It can actually reduce so much the learning curve, because the research you're able to make about that market in which you want to position yourself can be executed at a supersonic speed compared to a previous situation where AI wasn't there to help you. It wasn't the AI was not there to really give you so much more research, so much more quickly about where you're going to. Supply demand studies, they are invaluable when you go into a new market. You don't want to go unprepared without the right research. Of course, you have to do further research. You don't just go to an AI tool and ask a question and you expect an answer, and then you just take it and then you execute. Obviously, you have to do lots and lots of research from lots and lots of angles. But that's where AI can make a seriously big difference, reducing the risk. And as we know, valuation is tends to go the opposite way of risk. When the risk is high, valuation is low. When the risk is low, valuation is high, of course. Yeah.
Absolutely. Thanks, Matteo. Let's pause there for a minute and engage with our audience. So the first poll that we have for you is if you launch tomorrow in a new country, which challenge would concern you the most? Language, market knowledge, customer behavior, competition, or regulation? Let me repeat this. If you launch tomorrow in a new country, which challenge would concern you the most? Option A, language, B, market knowledge, C, customer behavior, D, competition, E, regulation. While we wait for the audience to enter their answers, Matteo, would you like to give us a small introduction to Failed Pivot Scale?
Oh, thank you very much, Margaret. Yeah, Failed Pivot Scale is the book that was published on the 1st of June. 1st of March, sorry. I forgot about it. Just 3 months ago. I thought it was 13 days ago. So yeah, 1st of March, 2026. Yeah, it's the result of my 2017 program I wrote for the university. The program was designed to really offer founders and finance professionals a system for intangible economies, a system that would allow really entrepreneurs to reverse engineer what investors wants, what bank wants, what customer wants from a business. And really the goal is to build a business that is not going to chase an investor. It's going to be chased by an investor. The business is not going to chase a bank. It's going to be chased by bank. And the same with customer will come to you, and we'll play this. Yeah, I'll happily play this 90 seconds at the end of this session. It'd be fantastic to do that. So watch out at the end of this video. You will find the video. You will find the Failed Pivot Scale, the link to the video as well.
Thank you, Matteo. I think honestly, it's a wonderful framework that every founder should read. It has some really wonderful insight, and it's very practical. So I would strongly encourage you to go through the book. So back to our questions, we see some answers coming in. What do you think, Matteo?
Yeah, it's very interesting to see how. Please do write your answer here. So we're talking about language, market knowledge, customer behavior, competition, regulation. Now it's very, very important that you think about this. Not only you think about this, but you also think about going global. because and thinking doesn't mean you have to do it, because AI is reducing dramatically the cost of being global and the cost of researching to become global. So all these are really important questions. I would say language is going to be less of a problem in future. However, each situation is unique. Market knowledge is something you should master, and that's where AI should really help you with your research. Customer behavior the same. Competitor analysis, fundamental, like the supply and demand analysis. And also regulation is something where AI can give you a very, very strong hand.
Absolutely. So Matteo, when businesses talk about localization, where should they start?
Yeah, this is the key question of this episode. I've thought about really localization consisting of 5 layers, and I'll tell you this. The level 1 is language. Okay, obviously, yeah. If there's a different language, that's the first layer you should consider. This is where most businesses will stop, and they shouldn't. They shouldn't. So where there are 5 layers, you should not stop at layer 1. Okay. Now let's come at layer 2. Let's say it's messaging. This is not just a very simple communication. It's about how customers will describe problems in that geography. Okay. So you need to build that kind of supply demand analysis and knowledge that will help you be successful. The layer number 3 is the buying behavior. It's the level 2 message about how customer they will go about the problem. But the next level is just a bit deeper. It's about customers making decisions. Yeah. Because one thing is a customer describing a problem. One thing is a customer making a decision. So understand really what drives a decision from a customer in that particular country. Layer number 4 is trust. What creates credibility in a particular market? Okay. And again, that's where research is invaluable. Make sure you really understand what creates really repeatability of customer buying behavior as well, because trust is just capital, is what is going to take you to the next level. And then the last one is business model. It's about how the value is packaged and sold. The more and the further you move through these layers, the more effective localization becomes. So just to summarize, we've spoken about language, number 1, messaging, number 2, buying behavior, number 3, trust, number 4, and business model, number 5. That's what I think localization means. It's a lot more than translation, because the level 1 is translation, really.
I entirely agree. And very often you see that a lot of businesses stop at level 1. So they just translate and then don't go that step further. And that is what is behind so many of the failures when companies look at market expansion. If I go even further, investors, they immediately recognize when a company understands these layers. And the reason is quite simple, is that international success, they want to see whether it's repeatable, whether it's something that is going to bring continuity and obviously lower the risk.
Yeah, indeed. I would say this. The risk is really there are 2 big subjects when you speak to investor about this. One is value transferability, and 2 is risk. Now, is the the fact of going global is going to make the business more value transferable? Of course, yes. And actually, it's also a way to reduce concentration in one particular country, is to make the revenue much more diversified. And risk is obviously, but if you go global with the right attitude, you will of course gain a lot, and obviously you will reduce the risk, the inherent risk that comes with any business. And repeatability is one of the foundation of valuation, absolutely. So you make your business much more repeatable and obviously less risky than it would have been.
Actually, it's a real thing. I think historically the process was really expensive. You had to hire research agencies, consultants, focus groups, local market teams. All of these are extremely costly and time consuming, obviously. What is different now?
Yeah, AI is doing something very, very important. It's compressing the time. It's doing two things. Obviously, it's making those who are ready much more ready, much faster. Those who do not react quickly enough, they will suffer. So time is a lot less of an issue now when you want to go global. Why am I saying that? AI can analyze a customer conversation. AI can also review competitors very, very quickly. AI can identify buying patterns. All this is so crucial if you want to go global, if you want to be successful. AI can generate marketing that is going to be adapted to the culture, to the local culture. Can also detect differences in sentiment. So you just go deeper and deeper and deeper with this, much quicker than you would have gone years ago. AI will suggest positioning strategies. So it will obviously help you. And don't forget about machine learning. Yeah. Machine learning means that the more you use AI to help you with this, the more AI will learn, and the quicker it learn, the better it continues to be. So that's why if you waste time, someone else will take advantage of you. And let's say this, that what once took months can increasingly be achieved in days. That doesn't eliminate human judgment, by the way, yeah? But it dramatically improves decision making. And we know that business is all about decision making, countless trade-offs every day, pre-calculating your risk, managing the risk, and executing.
Absolutely. In the past, one wrong turn was extremely costly, and sometimes it was basically cutting a significant portion of the budget into international expansion. So a mistake was difficult to basically get over if things went wrong. Now, AI allows businesses to basically experiment and see the outcomes before they decide to go through with a major investment. It's a significant advantage. And if you don't take it, if you don't use it, somebody else will.
Yeah, absolutely. And experimentation creates learning.
Apologies, we're having a bit of a technical issue with internet.
Okay. So yeah, I was talking about experimentation that creates learning. I can hear you very well. Yeah, creates learning, and learning creates confidence. And confidence attracts capital as well. Yeah. Are you okay? Are you back on this, Margaret? Yeah, that's fine. Yeah. So yeah, so what I was saying, experimentation creates learning, and learning creates confidence, and confidence attracts capital. So yeah, I mean, this is, and I was talking about machine learning before, and machine learning is what really creates really the exponential advantage that you can create for yourself, for your business eventually. Yeah.
Let's stop there for a minute and engage with the audience again. The question this time is, what would be your next target market? North America, Europe, Middle East, Asia, Africa? If you could please write your answer in the comments. We're very curious to see what are the options you're considering.
Yeah, interesting. We're talking about geography, although, yeah, as I said before, geography is as important as geometry sometimes when you go global. I would say also this, now ask yourself, do you truly understand how customer in the market will buy? We were talking about localization before, about the customer behavior, about the business model, because localization will start with curiosity, not technology. So that's something to consider.
Thank you, Matteo. I think we're ready to go even one step further and connect localization to valuation. Many people see localization as a marketing exercise, but it truly isn't. What do you think, Matteo?
Yeah, that's definitely a mistake, because localization is evaluation strategies, and as with each and evaluation strategy, it's about wealth creation now, because valuation depends on scalability, but scalability depends on how well you adopt the new market. And let's say this, if customers do not adopt the solution, the business cannot scale. So localization is really fundamental with this. You need to understand how you're going to scale, and how the customer is going to adopt your product. Now, the ability to adapt products, services, and messaging to multiple markets creates optionality. And as we always said, optionality is the opposite of dependency. So again, it's about valuation. It's about wealth creation and valuation at the same time. And investors will pay for optionality. So you're creating something that an investor will chase you for.
Actually, in M&A, this is something that we see recurrently, is that buyers will pay premiums for businesses that have already proven that they have international adaptability. And the reason is not because of today's revenue, but it's because of tomorrow's opportunities, right? So a business that has proven that they already have the know-how of how to expand is more valuable and carries less risk than a business that is completely set on one single market, on one single country.
Yes, and this is about really building the future that investors care so much about. When you build something that will create future revenue, future earnings, you becoming more investable. The more markets business can successfully serve, the greater those possibilities become. It's quite clear that if you come from a different continent and you want to conquer a market, you will pay a lot more for a business that is already serving multiple markets than a business that is serving just one market. Example, if you're a US business, you only sell in your own state, but then you start selling to all US states, and then you start to sell to Europe as well. even if it's the same number, but there is a lot less geographical concentration. The investor will pay a lot more, even if it's the same total number as well.
Absolutely. Let's go one step further and connect all of this discussion with the high valuation triangle. How would that look like, Matteo?
Yeah, this is where the high valuation triangle is. The global markets tend to be the first side of the triangle. So the way it works is that your intellectual property creates value, answering the question, what do you own? The succession planning allows value to transfer. So effectively, this is the prerequisite to become investable and bankable at the same time, I would say. And then the global expansion will multiply value. So we could actually say that the first two sides of the high valuation triangle, they could be seen as prerequisite for any investor to start a conversation, while global expansion will almost make that discussion inevitable, because the investor will already be comfortable that you own an asset. They will also be comfortable that the business will transfer value. Now they need to be comfortable that you can scale it, and global markets does that job very well. Localization within the high valuation triangle is the mechanism that makes effectively global expansion work. Without it, global expansion, it's really a theory. Again, it could actually become a real risk for the business, because if you just do the translation and not the localization, then you're going to be in trouble. So with localization, it really becomes a system. And this is what really creates enterprise value under the day. System, they always create enterprise value.
Absolutely, and this is why AI is so important. I'm gonna say this as not as a warning, but as a very important statement. It does not replace strategy, but it does strengthen its execution. And it's important to not confuse both of these.
Yeah, and I would say this. I always say, because this is one of the very negative effect of AI on people, because strategies are everywhere, execution is rare. AI creates so many strategies, but then execution, where is it? So AI allows businesses to understand markets at a depth and speed that didn't exist before, for everyone. Only the largest organization could have thought about deploying all this know-how, this knowledge towards global markets. So all this is changing the economics of growth, and ultimately it changes valuation. So that's what I would say. Yes, use AI to understand what a strategy is, but don't think AI is going to execute for you. It's going to help you, but you have to execute.
Absolutely. Execution is a rare commodity, they say. Thank you, everyone. Tonight, we've explored one of the most important lessons in international growth. And the reality is that customers won't buy just because you translated a message. It's not enough. They're going to buy if they actually feel understood and they identify with the services or the products that you're providing, whether they're identified with your company. And that's the most important lesson to understand from international expansion.
No, yes, indeed, I can only agree with you on that. It's so important to understand this lesson. And as we said, the high valuation triangle is made of three sides: intellectual property, succession planning, and global markets is the first side of the high valuation triangle. In order to help, we said before that the strategy is everywhere nowadays. You can find anyone doing, telling you that there's a good strategy, but then the execution is not there. That's why we have created the 12 outcomes in 49 days with a high valuation sprint. Now, together with this edition on LinkedIn, you will find a scorecard that will help you understand your position of your business against those 12 outcomes. Those 12 outcomes are designed really to help your business transform itself from a low valuation business to a high valuation business. And while you do that, you will create wealth. You create new revenue streams for your business, and you will become bankable, investable. You'll be chased by customer. You will no longer sell on price. You will develop the right pricing power in the market as well. So it's not just about valuation one day when you're going to sell. So I invite you to fill up the scorecard. It's a free exercise. You're going to receive a free diagnostic as well. And we'll tell you how you can accelerate in your business. Because AI is helping businesses understand markets more effectively than ever before. But don't forget, AI is either exponential wealth creation or irrelevance. So that's what you're risking. You're risking to become irrelevant. So when it comes to global market, it's not simply translating words, but it's translating value. Because ultimately, with successful localization, is not about language, it's about relevance again. And relevance really creates the growth. Growth creates the value. We're not talking about growth without structure. We're talking about growth with structure, which is real wealth creation. And that's what I would say as a summary for today.
Thank you, Matteo, for always a very, very nice summary at the end with all the crisp points of what we discussed today. Please do stay on at the end of this video to watch the short on failed pivot scale. Don't miss the opportunity to understand a bit more about what is behind the book, what's the framework that is being discussed. And in the meantime, thank you all for joining. Thank you, Matteo, and see you next week.
See you next week. Thank you. Thank you. Bye.